You're like a circle that floats around me, keeping me safe and sound. And when I fall, you tied a rope to me. You're blessing me every day. I was down with an illusion, like a sparrow with broken wings. But now I shine with your reflection on me. I'm getting back up on my feet.
Hey guys, Billy Ribeiro here again, head trader at Elite Trading. Today's number 4, is day number 4, right? And the subject of the day is revenge. You know, if you guys haven't gone through like the first day, second and third, I highly recommend you guys skip this day and go back to day 1, which is psychology. So the reason why, I'm splitting in 5 different days, it is for a reason. And I want you guys to make the best out of it, right? I want you guys to take the most out of this. Hey, 2023 is right around the corner. We're 8 days away from the New Year's, right? So it's about time to address this really, really, really delicate and important issue, which is revenge. So what happens to us as traders is, when we lose money on a trade, that we were confident that the trade would work out, like we feel compelled to seek revenge on the market, right? Or let's say we were up on a trade, but we got greedy, which we talked about in the previous lesson, and we're like, oh, I'm not getting out here, so why would I sell it for 130, for an example, if I can sell it for 150, right? So, and which is that's also part of discipline, right? And then also, if you put too much money on a trade and we lose, there's a strong chance that we'll try to make up for it by jumping back into the market, which almost always leads us to another loss, and sometimes an even larger one, because we're trading emotionally again. Emotions. I can't remember how many times we talked about emotions, guys, psychology, mindset, being greedy, right? And what happens to us most times is, because we don't have a system, which is the next lesson, right? Because we don't have a system, let's say we just buy wherever we think it's going to go up or down. We go long or short, wherever think it's going to go down, and we want the stock to give us what we want, right? If you guys remember, this is the trade live on Apple, right? Which all these levels here were called, right, to the penny, and then I didn't realize that this whole thing here happened afterwards, but it's on the previous video, so it's right there. So so I was talking about risk to reward here. So let me just clear this chart. So what happens a lot of the times with us is, okay, because we don't have a system. We don't have a system that we pay ourselves in as it's going up or down. And we don't have a standard risk. We don't have a place to stop. And we're always thinking like, oh, it's coming down. Oh, it's going to go back up. Oh, it's coming down. Oh, it's going to go back up. Especially for trading options. That's very, very, very dangerous, right? And trust me, guys, even though I'm teaching this lesson, so every now and then, this is something, because overconfidence it's also an issue, right? Because it gets to a point where you're so good at it that you just like, you think you're unbeatable, and every once in a while taking at least like taking some heat, it's very humbling, right? But what happens is, let's say, okay, we bought puts or we shorted Apple right here. And as soon as we started seeing this thing not going down, and then we cover the stock, right? We sell our puts. And then we see this going all the way down. It's either we try to jump back in chasing and it goes the other direction, or what we say? All right, okay, I got out early today, but tomorrow I'm gonna get you. And you know what? The next day comes, tomorrow comes, right? Let's say you go short here. Let's say you go long, right? You go long right here at the bottom. This is another day. Let's just assume this is another day. You go long here at the bottom. It starts going up and then get choppy. You don't sell anything. You're like, oh no, today I'm going to stay until the end. I'm going to maximize my profit. And then this thing here is coming down, all red candles, right? So, and then you're like, nope, I'm not selling, I'm not, right? I'm just going to be adding here. So, and then your strike ends up being way out of the money. So on a pop, you're not getting paid much. So, which is an issue that, I had teaching some students, right? Because when you add, your strike is too far out of the money, is you got to know when to add and when to sell, or sometimes even, okay, let it trade, bro, if you right, if you believe the trade, but trade one or two strike closer to the money. But that's another lesson right there. So, and then you know what, because you got out too early, the next day you got out too late, because that messed you up mentally. And guys, 100 times out of 100, you rather be like early. You rather you'd rather be like, there's that saying that like early than sorry, right? So safe than sorry. So you definitely want to be safe. But the thing is, so that's when the next lesson is going to come in place, having a system, knowing when to pay yourself and having to stop. But listen, this happens a lot because we got out early and we don't hold runners, and then the next day we tend to boom, and then it becomes like a nightmare. So I still remember a trade on Facebook that like I got out by accident of one of the biggest home run at a time. And the next day I was like, you know what? I'm gonna get you. And you know what? It was one of my biggest losses ever. And I got emotional, and I was like, oh man, this thing, it's gonna pop back up. And then I looked at the P&L, I got too emotional. I was all in into the trade. That was earlier in my career, right? I was all in into the trade. I had no money available to defend the position, to hedge or anything. And I got out of the position at the end of the day, boom, for a big loss. For the biggest loss that I've ever had, at the time. And you know what happened? The next day, it got that big time. I would have been up like 200% plus on the trade. And why was that? Lack of planning the trade, right? And trading the plan. I'm not even gonna write this because my my writing with the mouse here is horrible. So That's why, guys, like one of the words that, and then it's funny because, my buddy that, he's the one that got me into trading, right? And then would say, oh man, tomorrow I'm gonna revenge, this loss. And then it got to a point where I'm like, bro, don't ever, ever, ever say this word, man. This word is, man, it's cursed, like, because it is. So don't ever, ever, ever have that feeling. And the thing is, if you guys are, paying attention, sorry guys, I'm taking my meds here for fever. So if you guys are paying attention to my lessons, right? We know that, okay, the way we're talking, about trading for 2023, it's like you'd have to be wrong you can be wrong like 1 out of 4 times to be even, or one out of three, which is, a miserable 33% win ratio, right? On a 33% win ratio, all right, you're gonna end up the year like up over 1,000%, and we can do the math here together, right? Then only by having a system and knowing where you're gonna get in, where you're gonna pay yourself, where's the first target, second, third, and what is your standard risk, right? So revenge, do not ever, ever, ever say this word, and do not ever, 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 try to revenge the market, right? Because remember, if, especially if you guys study under me, if you guys study under me, my system will take you. If there's a home run, it will take you there automatically. Because if the trade didn't take you out, you're not going to get out. If you chose to get out early, you know what? You're going to live up to the next day, and you're going to stick to a system, right? Because let's say you could have been lucky enough today that, okay, so you didn't mean to buy puts here, but you bought puts, I'm gonna buy puts, and then you made a lot of money. But remember that the market is open 253 days a year. It's not because you hit a home run or you got lucky one day that's going to make you a trader, right? That's why having a system and having discipline, and that's when the mindset, psychology, right? Greed, fear, revenge, that's when it all comes in place, right? So I know you guys can, everyone that's listening to this, to this lesson here, I know you guys all can relate to it, because you know what? Been there, done that. And you know what? The only difference is, um, we all have the same feelings, right? But if you have a system, you're not gonna make that mistake. But right, so sometimes we all feel like chasing. We all feel like, oh man, I'm missing an opportunity here, so this thing's gonna go down, and we all feel like chasing. We all feel the same thing, but the thing is how you manage those feelings. And listen to me, fam. If you guys follow the recipes that I've been dropping every single day here, there's no way in heaven that you guys are not gonna end up the year up at least like 1,000%, 2,000% on their account. There's no way, right? Only if you guys, there's a way, right? Only if you guys, right? If you guys, you know, it's not meant to be, because trading is so simple. But if you guys set something like, okay, I'm risking $1 for $2. Or I'm risking 50 to $1. Or 50 to $1.50. Guys, you guys have to lose on a lot of the trades. So you guys are gonna learn. You guys are gonna have to learn how to answer trades. Because that is a serious problem. If you guys follow the rules, these simple rules, guys, it's so simple, but it's complicated at the same time, right? So you want to be the best trader in the world, just act like a robot, like you have no feelings. That is the best way, right? Because the thing that gets in the middle of success is fear, is emotions, is feelings, right? It's all in our head, right? As long as you have a predefined trade with a predefined risk, you're buying 100 shares, risking 50 cents to make $1. You guys know that max you guys can lose on this trade is 50 bucks to make 100. You guys made 100. Now you guys have one. All right. Now you guys, okay. Right. You guys haven't. So it's just like, it gets to a point where, all you're doing is you're risking the house's money. Let's say, okay, for an example here. So I love this example here. Let me just pause this for a quick. Now we can actually continue here. So this is an example that I love here. And then I'm just going to take you guys through the math, right? And it's all math, guys. So let's say you guys have a $1,000 account, right? And okay, you're gonna put $250 on the trade, and it's 2-1, right? And let's say, okay, and then you guys made $100, right? So now your capital is, okay, you have $1,100. Now, okay, once you made it your first profit, so okay, your next trade, you're risking to lose 50, another 50 to make 100. Let's say, okay, you nailed that, you made another 100. So you got $1,200, right? So that means for the next 4 trades in a row, if you guys mess it up, you guys are still going to be even. You guys are risking the house money. And that's when things when things becomes really exciting, because and then, right? So let's say you get to $1,500, $1,600. It just becomes like so much easier, because okay, you increase your size, right? And your risk to reward still the same, right? Where you'd always lose like 50 bucks, but to the upside, your wins are going to be larger, right? So it's going to stop being 2-1. It's gonna start being like 4-1, right? Because let's say, okay, so we're trading. Let's get a cheap stock here that for a 1K account, right? Let's take a look at AMD, see where AMD is trading. Okay, AMD is trading at, okay, $63. So, which means is it's a pretty expensive stock for $1,000 account if you're trading equity, right? For options, it's perfect because the options are so cheap. But let's say, okay, even for equity, right? You buy 10 shares, right? So, okay, what's the range? Okay, the range today was like $4.05, right? So you buy 10 shares, right? You're spending, like, okay, $635 buying 10 shares. So what's the worst thing that could happen here? All right, if you're risking, right, 50 cents to make $1 to $1.50, $50 is you can lose, you lose like $5, right? You actually lose like $6.35 to make like $21 pretty much, right? So like I said, for equity, so you'd have to be looking into like stocks that moves a lot. That's like, in the $4 to $5 range, more into like penny stocks. But for options, this is just like the perfect, right? Perfect ticker, MU, right? MU. So, okay, so yeah, the ATR in the past 10 days is $1.89, right? So you're risking 50, right? Let's say you buy 100 shares, right? It's gonna be like $4,940, right? The max you're gonna lose on this trade is $50 to make 150, right? You guys see how easy it is? And then this number just keeps on adding up, right? And guys, so the math is, it's so simple. If you have a $500 account, if you double a $500 account, how much money is that? 1K. If you double 1K account, how much is that? 2K. If you double a 2K account, how much is that? 4K. 8, 16, 32, 64, 128, 256, 512K. And then it gets into what? 1,024,000. The way you trade, is the same way. The only thing that changes is the size, but your risk will always be 2 to 1, 3 to 1. Right? Okay, guys, so that's what I want to leave you guys with. Right? So please, if you guys like the lesson, please like, share, subscribe to the channel. It's very important, for the YouTube algorithm to just get the word out there. I want to help as many traders as I can for 2023. And due to not posting things forever, and then the things I did posting myself, so I messed up with the Google rankings and analytics, so it's really messed up. So if you guys can help, I appreciate that. And guys, just leave a comment if there is anything that you guys want me to address. Just leave a comment below the video, and I promise you I'll get a lesson on the subject, and we'll get things going. All right, thank you very much, guys. You guys have a great day, great evening, great night, and I'll see you guys tomorrow. Take care, FM. Goodbye.
You're like a circle that floats around me, keeping me safe and sound. And when I fall, You've tied a rope to